Now, looking at this over here, we are at the 4 hour. Here's how we go from book to chapter to story to paragraph to sentence to word to whatever. I'm going to get this ellipse over here and I'm going to look at this last candle over here and I'm going to put that in a circle. Actually, these last two candles. Just by thinking about it, just by using common sense and fluid intelligence, if I go down from the 4 hour to the 1 hour, how many candles will we see in this circle over here? One, two, three, four, five, six, and we are in the seventh right now. This will close in 3 minutes, and then there will be another candle for 1 hour, and then the 4 hour will close. So, what happened in this 4 hour candlestick? This 4 hour candlestick showed us that on the 4 hour, we can see two candles, one of them which is bullish, and then the other one which is bearish at the moment. This at the 1 hour will show us the details of this. So a wick on the 4 hour might be a body on the 1 hour. We just need to see how the candles open and closed over there. So if we go to the 1 hour again, we will see that this is a wick over there, but this is a body at the 4 hour. And this is why these time frames matter. We would want to focus on the bodies, on the wicks, on what the stories of the candles are. Now, what happened over here is throughout this phase right now, we have moved to a new high. So we want to make sure and see that this is not only a wick on the 1 hour, we would probably want to go to the 15-minute and make sure that a new high is reached. And over here, we can confirm that. So from the 1 hour to the 15-minute, obviously, it's going to be four candles for each 15-minute, but it's two, so two times four times whatever number of candles that we had, it would be the amount of candles. All these candles on the 15-minute are two candles on the 4 hour. So this is why we look at the 4 hour and we determine the range and then we move over down and we continue moving over down and we get more and more data to understand what's going on with the markets. Now, since this over here has created a new high, that means we have higher highs and higher lows. Does that mean we have a bullish market or a bearish market? Now, at the 15-minute, you might want to look at, what's going on. You might want more detail. You might want to see if there's entry. So you look at the 5-minute. And then imagine just these two candlesticks on the 4 hour give you all this depth in detail. Now, something that I want to talk about is gaps. These gaps over here that happen are called imbalances. These imbalances that are left in the markets are not market gaps, not market gaps based on the bodies. They're just market gaps based on unfilled orders in the market. So if we're able to find a demand zone, which is not the session for today, but we will talk about this, a demand zone that has an imbalance, this is the demand zone that we care about. So when price comes all the way down to revisit this demand zone, we are ready to rock and roll. This is basically a sneak peek of what we will be talking about. This is basically time frames, candlesticks, what trading is, etc., etc., etc. Your broker over here is forex.com for this one. But if I go ahead and write Euro USD, you will see all the list of brokers over here. And it basically is you would want to have this one be wherever you deposit your money. If you're not working with a funded account and you want to deposit capital, this is where you would want to see because price might vary a little bit or the candles might close or you might enter price at, for example, if we get a buy position over here, you might enter price at this point, which would be 1.32309. On forex.com, it could be this. And when you enter the trade and execute, if your broker that you deposited into is not forex.com or Owanda or whatever, then this number might change. So if you're actually putting your stop loss, you might be kind of wicked out from that stop loss and you'd be taking out the trade. But on Owanda, you'd look at it and you'd be like, oh, nothing happened. So it's important you link it to whatever it is. If you are on a funded account, then it's just the broker of your choice, whatever you want. It's just for me, I love forex.com because they basically work with all of the regulated funded firms or whatever. I am now moving to a live account, so I just deposited 200 grand in a live account. But I'm also still working with my funded accounts because I'm funded with probably like 3 million in my funded account. So it's basically whatever wherever I want to withdraw from or whatever strategies that I'm using. I just want to use a funded live account now because I'm trying more stuff to add to the strategy and make it simpler and whatever. Not that you should care about this, but just generally speaking. So this is the broker that you need to use, forex.com if you're on TradingView. But if you're actually investing and adding money to your account, you would want to pick a brokerage that works in your region and make sure it links to your TradingView so the numbers link.